Mt. Gox was once the largest Bitcoin exchange in the world, but 10 years after its collapse, it's now looking like it could be responsible for ending our current bull market. Today, we're going to be looking into whether Mt. Gox could crash the Bitcoin price, and where better to start than the value dates destroyed multiple chart we have here on Look Into Bitcoin. And if I just zoom in, you may notice something a little peculiar. Very recently, well, yesterday as I filmed this, we had a huge spike in the value dates destroyed multiple, significantly higher than we typically see. We usually see this very cyclical moves to the upside and the downside, but we've just had this massive spike to the upside, sending the value days destroyed multiple times higher, over twice as high as it was just yesterday. So why is this? Well, if you haven't already figured it out, Mt. Gox has recently transferred a huge amount of old lost Bitcoin to a new wallet. So Mt. Gox, like I said, was the biggest Bitcoin exchange in the world by some margin back in 2014 until they shut down and lost everyone's Bitcoin. And if we go here, we can actually see that now we're actually getting some information that Mt. Gox has been transferring some of this lost BTC, over 140,000 Bitcoin or over $9 billion worth, to this address to potentially begin repaying out creditors, repaying those that lost Bitcoin on the exchange. And if we go to the long and short-term holders chart we have here, and specifically the long-term holders, we can again see that this dropped from around 14.875 million to 14.73, 145,000 BTC drop again overnight, which was kind of against the trend as this was flattening out. So we can definitely see that this activity on chain is moving. This huge amount of BTC has been moved. And if we go to the supply adjusted coin days destroyed, again, very much supporting this as we've seen this huge, very sudden spike to the upside. That indicates that the amount of BTC, huge amounts of BTC that have been held for an extended period of time, are now being moved at levels we typically don't see unless we're at all-time highs, unless we're at cycle peaks. It's actually taken us higher to the new all-time high we set just a couple of months ago, above $70,000, and pretty much in line with what we saw in 2021 and much higher than what we saw in the earlier 2013, 2012 cycles. So it's definitely somewhat alarming. If we go to the whale shadows chart here, which I think is going to be one of the most important ones to be watching, because a huge amount of these BTC holders being repaid their Bitcoin are likely going to have quite a lot of BTC. And if we just isolate this to 10 plus years, considering this was over 10 years ago, we can again see that this is really starting to heat up. We're seeing substantially more whale shadows in the most recent weeks and months than we have done in, well, years really. But I don't think this is necessarily something we need to immediately worry about. If we just look back on the whale shadows here and remove the 10 plus years and look at pretty much 4 to 9 years of those that have been selling over 100 BTC at a time, we can see that this typically happens almost all the time, especially during bull cycles. From here in the 2017 cycle, this started heating up as the Bitcoin price was only just above $1,000 and we peaked at near $20,000. Again, in the most recent 2021 cycle, here in 2020 at about $13,000, $14,000, this really started heating up, this cluster of whale selling, before we peaked at nearly $70,000. And now we are seeing a huge amount of whale activity, but that, like we can see, doesn't necessarily immediately mean that we're going to see a huge dump in the market just because we're seeing some BTC being transferred. And again, if we look to the open interest, something that I'll definitely be watching closely is if I had hundreds of BTC, I would probably be looking to maybe short the market, sell my spot BTC, crash the price, and then you profit from maybe buying back at lower prices and from having a short position. And if we go to BTC denominated open interest here, we can see that we haven't seen any indication of this yet. This has continued to steadily decline. And if we are to see some selling, it may not be a very aggressive, very sudden dip. If we look at back to just here where Bitcoin's bear cycle absolutely bottomed out, we could see that the open interest was massively building. So once we started getting this squeeze to the downside, once we started to see positions being liquidated and then there's having to cover the positions, we get this big squeeze to the downside, this very rapid and volatile price action. Whereas we haven't really seen that, which is good. It means that if we are to see a little bit of retracement in the price action, it's probably not going to be overly aggressive because there's not a huge amount of positions that are available to be liquidated. But if we look here to the realized price and specifically back to when Mt. Gox failed, lost everyone's coins back in early 2014, we can see that the average accumulation price of BTC at that moment in time was around $300 or so, $320, $330-ish. If you received Bitcoin after 10 years and you'd made over 200 times on your position, would you not sell a few of them? I think a lot of people, a lot of those receiving coins from Mt. Gox are definitely going to be considering doing this. And if we are to see that, then maybe we need to look to where we can potentially see some buy pressure support. If we go to the short-term hold at realized prices, which is where we've most recently bounced from after a retracement from our new all-time high, this is currently sitting at just above $60,000. So this is definitely going to be a good area to watch. Once we see new market participants begin breaking even on their position, it's definitely going to be a good area to potentially buy back. But like we could see from quite a few of these metrics, the whale shadows, the long-term and short-term holders, it doesn't necessarily indicate that we are going to see an immediate dump in the market. And in every single cycle, we see hundreds of thousands of coins change hands from long-term holders to short-term holders. It's maybe not dumped immediately, but it's definitely having an impact on the market. And I think one of the new charts we have that's definitely going to be one to watch that we'll do a deep dive video on in the next week or so is the spent output profit ratio. Now what we can see here is the amount of BTC profit taking or capitulation based on profit of a position. So just to simplify it, if you had held BTC for multiple years and sold, you'd likely be selling it at a profit. Therefore, we'd see this spent output profit ratio considerably positive for your position. And then we aggregate all of these positions over that day, and then we can see every single day the amount of profit that's being taken. If we go down here, we can see the actual definition of the UTXOs and a little bit more clarification on that calculation. But we can see, again, this has spiked very massively to the upside, but this doesn't necessarily indicate profit taking. This has just been BTC being moved from wallet to wallet. So unless we start seeing this considerably, reliably stay very high, many of these people receiving BTC may just receive it and hold for higher prices. Just because they're receiving BTC doesn't necessarily mean they're going to sell all. And if we look at something like the ETFs, which have accumulated tens of billions of dollars of Bitcoin only in a couple months, then really $9 billion, especially if it's spread over a few weeks, a few months, maybe even a year or so, it's probably going to have a fairly negligible impact on the market. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on lookintobitcoin.com, your number one source for Bitcoin information. So just to summarize, Mt. Gox was by far the biggest Bitcoin exchange in the world until its collapse in early 2014. Now over 140,000 BTC has recently been transferred to a holding wallet that is believed to soon be used in repaying creditors their lost Bitcoin. Like we could see from the long-term holder supply, like we could see in many news articles, the value days destroyed, supply adjusted, coin days destroyed. This is a huge amount of on-chain activity in a very short space of time. And as a result of this, we have seen many people beginning to question whether this could lead to a huge dump in the market. However, it is unlikely to have an immediate negative impact on the market, at least a very substantial one. We're not seeing a huge rise in open interest, so even if there is a dip, it's likely not going to cascade into a big squeeze to the downside. And there's no real necessarily concrete evidence that people are going to just immediately sell. And 140,000 Bitcoin, while it is, of course, a huge amount of BTC, this is likely going to be scooped up by retail traders, institution, ETF buyers. In a fairly short space of time, 140,000 BTC over the course of a bull cycle is very minimal, to be honest. And unless we, like we said, get an immediate dump for a huge portion of these new BTC receivers, it's likely going to have just a temporary pullback effect or even a negligible effect. This may even be a bit of a sell the rumor, buy the news event. Ultimately, we can't say for certain, but there's been many instances throughout Bitcoin's history where price is going to crash because there's lots of open BTC dumping on the market. And realistically, we're tens of thousands of dollars higher than we were just a few months ago, when there's been lots of whale shadows profit taking, like we see in every bull market cycle. So really, until we see some evidence of some prolonged profit taking by these market participants, I don't think it's anything you should be really worrying about too much. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on the potential Mt. Gox crashing the market, potentially ending the bull cycle as we know it. Do you think this is maybe being a little bit overblown, or do you really think that this is a huge event that is going to have a massive impact on the Bitcoin price action? And are you taking any action based on this news? Are you beginning to maybe scale out of your positions? Are you preparing some dry capital in hopes of a big dip to scoop up some discounted BTC? As I said, let me know. It's definitely an interesting period of time, and it'll definitely be something we have to watch closely over the next few weeks and months. But anyway, let me know what your thoughts are in the comments below and on social media. As I said, I look forward to reading and replying to all of them. Thank you all very much for watching, and I'll see you in the next one.